Crude oil, a commodity the modern world can't live without, but prices for the precious liquid reached their highest since November, on the back of a decision by Russia and Saudi Arabia to extend their voluntary production and export cuts until the end of the year. Riyadh will cut an additional 1 million barrels a day, while Moscow says it will reduce daily exports by 300,000 barrels. For the first time this year, the price of Brent crude futures hit $90, with analysts saying further cuts could push that high even higher.
Now the anticipation is that, okay, where are we going to go from here onwards? Will there be another supply cut? And then what we see here in terms of the price action, I think speculators still believe that this is not the end, the voluntary supply cut. This is just not the end. I think there could be a further cuts down the line as well.
As the price of this commodity rises, the energy sector is looking forward to higher profits. But for the global market, it signals the threat of further inflation. In the United States, inflation has been on a downward trend as the central bank continues to raise rates, with its most recent hike in July taking it to a 22-year high of 5.5%. But analysts are worried that the surge in oil prices may push inflation up once again.
If prices continue to remain where they are, or if they remain anchored in place, there is a threat that inflation trend could change its direction. Inflation has been trending to the downside, as we all know, since the beginning of this particular year. We've seen a lot of improvement, but the most recent readings when it comes to US inflation, it has begun to worry some investors.
A report by Morgan Stanley says that the Federal Reserve's battle against inflation is putting a strain on the US economy. But with fresh oil cuts underway, inflation looks set to keep central banks on their toes. Reagan Des Vignes, TRT World.
For more on this, we're joined by Neil Atkinson in Paris, who's an independent energy analyst. Welcome back to the program, Neil. Now, analysts at Goldman Sachs have warned that oil prices may reach well into triple-digit territory by next year if Russia and Saudi Arabia keep up or extend their production cuts. Do you predict that as well?
Well, there's a lot of weight being given to the word may in the Goldman Sachs statement you just read out. Look, it's highly possible if we see two things. Number one, the OPEC plus cuts are extended into 2024, as you suggested, or indeed even deepened. And at the same time, the global oil demand picture remains pretty strong. If both of those things happen, then it is possible we could get oil into $100 and above. But there's an awful lot can happen between now and then.
Now, there's obviously an obvious case for Russia and Saudi Arabia to be doing what they're doing. Russia needs to continue to fund its war machine in Ukraine, while Saudi Arabia wants to balance its budget. But is there a chance that their moves could backfire? Could it perhaps have a flow-on effect and force shale producers in the United States, for example, to perhaps pump more out and thereby increasing supply of that oil?
Well, it's certainly true that if US shale producers are convinced that higher prices are likely to remain for longer than they might have thought before, that it could tempt some more shale oil into the market. But I don't think it's likely to make a massive difference in the next few months. The other thing we should look at is that outside of the OPEC Plus alliance, there is expected to be higher production from various places, including Brazil, including Canada, including Guyana, more exports from Iran, and possibly more oil also out of Venezuela. So to some extent, the cuts which Saudi Arabia and Russia have announced and have extended to the end of the year, to some extent, they'll be offset by higher production from somewhere else. But as I said, there's a lot going on, a lot of moving parts, and I really do not agree that we can say with certainty that $100 oil is going to come, and once it comes, it's going to stay for a significant period of time.
Well, in the past, amid higher oil prices, we've seen countries like the United States and France lean into producers like Saudi Arabia, urging them to perhaps unwind their production cuts. At what point do you think Joe Biden or Emmanuel Macron or other world leaders will do the same?
Well, I don't think that the OPEC Plus countries really care very much what Emmanuel Macron has to say, because he has very little skin in the game or influence in global oil markets. The United States, of course, is very different. But we saw back in 2022, in the middle of the year, when President Biden visited Saudi Arabia, that Saudi Arabia did not listen to his request for higher production, because in 22, as you remember, oil prices were rising. We were running up to the congressional elections in November of that year. And I would imagine that as we go into 2024, if $100 oil is maintained, Joe Biden will be very alarmed. But I suspect that his any requests he may make to Saudi Arabia are likely to fall on deaf ears, certainly during the initial part of 2024. Because you said in your opening remarks very clearly, Saudi Arabia needs higher prices to balance its budget and to fund the big infrastructure and economic developments that it has in place and is planning over the next few years.